All right, guys, good afternoon. This is Christian from Hertz Tribeca Trade Group, and it is, well, I almost said Monday, but it is Tuesday, May 26th. Again, it always feels like a Monday when you've got the 3-day weekend, but it is what it is. Today is Tuesday. So, a lot to talk about with today's price action, and hopefully, I can kind of help you a little bit, provide a little bit of reasoning for this. It's very easy for me to talk about this as well after the fact. This is something that I kind of have been talking about for the last couple weeks, but I'll get into more detail about that. So first of all, these days are very difficult. These gap up days. I mean, I really don't understand why somebody was bidding up the market this much, like near 2%. What we were up about 2%, really on nothing. So it was really odd to me that, possibly that the market. The only reasoning I can really come up with is that the market was maybe being held back a little bit last week because we had a 3-day weekend, also because of some of the China stuff. But for us to be up to 2%, so the number one rule that when we go into a market that's up 2%, take profits. Just, it's a gift. Take it and be happy with it. Go for a walk the majority of the day. Just take it, because it really, like, if you think about it, there's no good reason why we were up 2%, why the small caps are up over 3%. So just take the gift, and if you have to, just leave for the day, or half a day. I can't do that. I run a trading room. But I'll tell you, if I was just a regular trader, I would be outside for the day when something like that happens. Now, let me go over, I always like to go over my particular situation, and that is that I was not long going into this weekend. So this was particularly frustrating for me because I've been trying to look at things like sentiment, either the Nasdaq sentiment, the Citigroup panic euphoria model, right? The market sentiment model has been way over the tips of its skis in terms of basically showing you that there is a lot of euphoria in this market. So what did I do with that? Let's see, where is that model? And this is something that's not new. This has been in euphoria now for a couple weeks. But the further that this gets into euphoria, the harder the thump is going to be when this kind of, either we get some bad news, you're just going to see violent sell-offs. And we saw that in a few names today, but nothing that dramatic. I'm being a little bit dramatic, but I think you just kind of have to be prepared for this, is that the market goes up and it goes down. And when we hit panic down here, this was a great tradable bottom. But right now, the market is really, really hot. And I can't say that. I'm trying to think of as many ways as I could possibly say that to you guys. Same thing, if you look at the Nasdaq Sentiment Index, what is this telling you? It is telling you that it is way super hot. So, the reason why I go over this is because you should not be surprised when you see the market. If the market has a sell-off day, you should have in the back of your mind that this is going on, and also that you should be really being careful with your positions. You could participate, and that's what I did today. And I said this a couple times today. I'm like, hey, I'm just basically trading a little bit to participate. I'm here. I might as well do something. But this is not a good setup when we come in like this hot. So again, that's the best thing I could do to kind of tell you. And again, I'm not telling you what to do. I'm not giving any advice or recommendations. But if I had the option to do it and the market opens up over 2%, what else are you looking for? I would have to say. So now again, you could stay and you could participate and so forth, but it should not be a surprise to you that the market gives back some of the gains that were basically out of what? We have no idea why the market was up this much this morning. So if you don't know, if it's like, okay, well, there was some type of major action that happened, like we cured the virus, then I would say, okay, that makes sense while we're up 2%, and that the cruise liners are up 15%, and that the banks are up 10%, right? If we cured the virus, if the vaccine came out and it said, that they have results, they're positive, and we're going to have a vaccine in 2 months. Okay, banks should be up 10%. I agree with that. but we have nothing. So we have a trial that says that they may get out of phase one trial in some drug that has a small chance of doing it. Do you understand my point? I'm being a little bit dramatic, but there's no reason for the banks to be up 10% today, other than they're getting squeezed. And by the way, so this is the other thing. It's amazing to me how many people forget about last Monday. The same exact thing happened last Monday. If you look at what the regional banks did, so why did they go up again last Monday? Well, because last Monday it was Moderna, mRNA, so that they were making their way through phase one, and then all of a sudden you see a rotation out of what's known as the haves, all of the biotech names, all of the just high growth names, software names, right? Shopify was down a lot today. Doesn't that make a little bit of sense to you? All these names that have been running because there's been no alternative, if they start to inch closer to a possible vaccine, do you think Shopify is going to stay at the all-time highs? No, it's going to be rotated out of, and they're going to actually go into the banks a bit, and they're going to go into other value plays, some restaurants. Now, does it warrant a move in NCLH by 15%? Notice it was up 17% last week. Is there a coincidence with that? No, they said that they were coming close, not coming close, but there's a little bit of progress towards a trial. So you have to make adjustments as you see new information on the tape. This was one of the things that I sent out last week. I said, here's one of my thoughts. Question: as the country reopens, will the Qs be the dominant index going forward, or will there be a rotation? Using technicals, one of the things that I said is we're getting to major resistance in the Qs. There's a VPOC on the daily chart. Do you think that this was a coincidence? Right? We've took out the VPOC here in the Qs and sold off. So you just kind of have to ask yourself a couple of things. With market sentiment still super hot, do you want to be taking the same risk that you took here versus where you took it here? Right? That's the main thing to kind of think about when if you're looking at sentiment. Now, if you're ignoring sentiment and you're just going to do what you're going to do every day, then it doesn't matter. And then then you should not be shocked at results that a name like Shopify is down 7%. Again, if you're not going to look at any of these, or if you're not going to believe like sentiment is running hot, then that's fine. Then that should be okay with you that Shopify is down 7%. So the reason why I go over this is so I try to tell you guys to make sure that you're taking profits, and if you're going to be in this market with euphoria as hot as can be in terms of this, and again, if you don't want to use that model, you could use the NASDAQ Sentiment Index, which is an all-time high. So if you're not making adjustments, you're going to have a thump in your P&L when they decide to rotate out of some things. So just bear that in mind. I think it makes sense for me to be a little bit dramatic because I do see a lot of people that are surprised today. Why is this happening? Well, so again, you have to think about if they are going. Now, again, I don't think we've cured the vaccine. So this may be more or less a one-day thing. Why do I think it could be a one-day type thing? Because we have not solved the vaccine. We don't have a cure for the vaccine. So it could be like we saw last Monday. And by the way, so what are we looking at, by the way? This is small cap value over small cap growth. And all day long last Monday, value outperformed growth. Then, remember what happened after Monday? Well, they came out and they did a secondary on Moderna, and then there was some doubt whether or not that study is that conclusive. And what happened for the rest of the week? Well, the growth names outperformed a little bit, and some of the stay-at-home names, because we don't really have anything that concrete yet. So this could be a one-day phenomenon unless if they make more and more progress for a vaccine, then possibly more things like the banks, like the travel and leisure names, the airliners, they may continue to run. but they need that news in there. But overall, regardless of this picture between value and growth, which looks like this, right, which is still just basically coming off the lows, value versus growth has been and that's another thing to kind of think about too. You have to think about this ratio is so out of hand right now between value and growth that from time to time you are going to see profit taking in the growth names. Now, I said this a couple weeks ago. Now, full disclosure, I've said this for a couple weeks, and growth names, besides what we've had these last couple of days, today as well as last week, growth has continued to be king, right? So it doesn't. I don't think like it means that it's over, but I think you have to make some adjustments. And again, we went over all this in the weekend video. But when sentiment is this hot, if you're not making any adjustments at all, then you shouldn't be surprised if you have a couple really big negative P&L days and you're really long. All right, you have to make some adjustments to counter this. And again, it's one of those things too where you're going to be like I went through this like deja vu all over for me again, because this is what happened to me last Monday too, because I was not positioned. I will continue to be really smart because I don't think the risk to reward is there. So if I come in one day and the market is up 2% like it was today, I'm going to be a little bit bitter. Right? Where's my where were my end of week thoughts? So again, I will tell you, it's not fun for me when I'm trading super disciplined because market sentiment is so over the tips of its skis hot. I want to stay as nimble as possible, but it's tough. It's tough to kind of come in today and just sit on your hands all day long. If you did what I did last week, which was reduce risk. So that's the story. I do think if we look at the S&P, that you will see on the weekly chart we are hitting major resistance as well. So 3022.75. So if you still want to participate in this market, I'm not going to be holding as much risk because we're hitting major resistance and sentiment is super, super hot. Now, I will continue to kind of trade on a smaller scale, and I will continue to look for setups, but they're going to be like, this setup in a couple names that I saw today, looked pretty good. Like this setup in work today, it's just going to be, I think it's just going to be a little bit more difficult, right? It's not going to be as easy as it was for the last couple months. Right, but this is a nice move out of digestion, out of consolidation. All right, and also some sectors. So again, this was the move after the open. The banks, clean energy names, also did okay today. They were up 5%. So again, some big movers, and it's one of those things too where when something like this happens, when these things are up this much, and again, this is exactly what happened last Monday. So again, it shouldn't really be a surprise unless you took off last Monday or weren't here, but it was the same type of move. Look at LUV, up 13% last week, up 12% today. Right? This is a move that is basically on the country possibly getting closer to reopening. So these days can continue to happen if they make more progress. And if you don't have a crystal ball and you don't know when that's going to be, does it make sense to maybe have a position or two? The one thing I had on was Boeing going into today, which was not up 13% on the day, but that's how I played it. Somebody asked me in the room today, they said, why'd you decide to leave those Boeing short-term calls on? Because of something like this. And maybe it would have been a little bit more resourceful to have on something like JP Morgan, because JP Morgan isn't as expensive as Boeing, and JP Morgan was up actually more than it was last Monday. It was up 7%, possibly because of that Jamie Dimon interview. All right, guys. So that's it. I hope that helps a little bit. But I'll tell you, I'll reiterate kind of what I said already. Uh, that it may be a one-day thing. If we hear more progress, again, I feel like I did the same exact video last Monday. Um, but if we get more progress on a vaccine, you could see more of a catch-up trade, because if you look at some of these things, right, look at the difference between the Qs and look at the difference between something like, whoops, small cap value. Look at how much small cap value has retraced of this move. Maybe a third, versus the Qs, which can do quite well because people are working from home and it's very technology driven, something that we are all heavily using these days. It makes sense to me why this has rallied heavily. But if people start going outside more, maybe travel and leisure stocks and things like that, that banks might actually do a little bit better, where some of the things that have been closed may start to do a little bit better and may rally off the lows like they are a little bit. All right, guys. So that's my explanation for today's price action. Again, overall, I don't come in here and basically say, "Oh, I crushed it today." This was not like a fun day for me at all, because again, I didn't have much exposure on, and it was rather difficult to day trade today too with a gap up day. Which again, gap up days, like I said in the beginning of the video, they're better for just, I think, if you're going to try to day trade, keep the size down. If not, just basically go out and get some fresh air. All right, guys. Thanks a lot and have a great night.